Every major index closed lower this week, but nothing closed like semiconductors did. Two chip makers just broke stop levels we called last week. We're going deep on both. Panic Sell Weekly, semiconductor sell-off. Let's look at the charts. I'm Phil McCandlestick. Before we start, a quick note. You're going to hear some system-specific terms in this video. Things like bull flip, bottom catch, and all M as aligned. I'll define each one the first time it comes up. No jargon left unexplained. Let's start with the big picture. All three major benchmarks closed lower this week. The S&P 500, the Nasdaq Composite, and the Philadelphia Semiconductor Index, which everyone just calls the semis. The S&P 500 fell 1.55% this week, closing at 74.57. The system still reads this as a confirmed uptrend. That bull flip, the exact week the trend switched bullish, fired 14 weeks ago. Under the hood, the S&P's structure is still healthy. All M is aligned and strong trend. Two separate checks on how committed the moving averages are to this trend are both confirmed bullish. This pullback hasn't cracked the foundation. The Nasdaq Composite fell harder, down 2.9%, closing at 25,520. Same bull flip 14 weeks ago. But here's the difference. All M is aligned just flipped to neither bull nor bear. Strong trend, which only tracks the slower, longer-term average, is still holding bullish. The fast-moving structure is cracking before the slow-moving structure does. Now the Philadelphia Semiconductor Index. This is where it gets serious. Down 9.97% this week. Essentially a 10% drawdown in 5 trading days, closing at 11,673. The semis fell from a weekly high of 12,846 all the way to 11,194 before closing. That's a range of over 1,600 points in a single week. The confirmation score, how many of our 4 key signals agree with the trend, reads a flat week, 0 out of 4, on both the bull and the bear side. This chart doesn't have conviction in either direction right now. So the broad market pulled back, but semiconductors led the way down by a wide margin. That weakness isn't abstract, it's showing up directly in the individual chip stocks. Let's look at 2 of them. First, AMD Advanced Micro Devices. AMD dropped 11.14% this week, closing at $495.76. That's after briefly hitting a fresh high of $574 earlier in the week. This stock swung over $113 from top to bottom. Here's what makes this one notable. Last week, we set a trailing stop at a weekly close below $500. This week's close came in below that, $495.76. On a closing basis, that stop was hit. At the same time, all M as aligned. Remember, that's the fast-reacting check on the short and medium-term averages. Just rolled over to neither bull nor bear. But strong trend, the slow-moving check, is still bullish. When the fast signal cracks before the slow one, we call that a lagging versus leading divergence. It's an early warning, not a confirmed reversal. The chip data backs that up. Locked chips, the portion of recent buyers sitting at a loss, jumped from just 2% last week to nearly 15% this week. A real chunk of buyers who chased the highs are now underwater. So, AMD, technically still in an uptrend, but the stop level we flagged got triggered and the fast-moving structure just cracked. Worth watching closely. Next, Micron, ticker MU. Micron fell even harder, down 13.31% this week, closing at $848.95. Like AMD, this is the second straight rough week for this stock. Last week, we set an exit trigger, meaning a level that, if closed below on a weekly basis, would call the uptrend into serious question at $891.66. This week's close came in well below that at $848.95. Unlike last week, when a similar level was only touched briefly during the week and recovered by the close, this time it broke on the close itself. We also track something called fund simulation, a 0 to 100 score modeling institutional money flow. Micron's fund sim fell to 68 this week, breaking clean through the 75 level we'd flagged as a warning line the week before. Micron's bull flip technically hasn't reversed, and one slower trend check is still holding. But between the broken exit trigger and fund sim breaking down, this is one of the more serious warnings in this week's coverage. So here's the full picture. The S&P is pulling back, but structurally intact. The Nasdaq is starting to show cracks in its faster-moving structure. The semis got hit the hardest of any index we track, and that weakness is showing up directly in individual names. AMD triggered a stop, and Micron broke an exit level outright. None of these are confirmed trend reversals yet. The system's core signals haven't flipped. But when the fastest reacting index in the market drops 10% in a week, and 2 of its biggest components both break levels we were watching, that's not noise. Full breakdowns on AMD, Micron, and today's other coverage are up now at panicsellweekly.com. The news is noise. The chart is all that matters.